Indeed, their quotas are 2 or 3 million barrels above where they're actually producing already. So any cut would be some fictional height. Your thoughts?
Well, I think people are getting a little bit carried away by the remark made by the Saudi minister the other day. They're not due to meet formally, I think, for another, 10 days or so, something like that, the OPEC plus countries. And I think the biggest concern right now, frankly, is not how much or how little the OPEC plus countries might increase or even decrease their production at their monthly meetings, because the volumes in any case are not going to be very great. The focus now is more on the demand side. And that is where all the action seems to be in terms of people amending their data, amending their outlooks. All the focus right now, I think, is on the demand side.
Let's welcome back to the table Ali Al-Riyami, consultant and former Director General of Marketing at the Ministry of Energy and Minerals in Oman. Welcome back, Ali. I hope you had a nice break in Zanzibar, I believe, which is always a nice place to spend one summer. Ali, the idea of moving into the summer break was one in which you would say there was still the dominant narrative and sentiment was concern about supply shortages, the Russians' supply not getting to market. The IEA had forecast earlier in the spring there were 3 million barrels of Russian oil would be disrupted. Of course, none of that has transpired, and we come out of the summer with things more concern about demand destruction now rather than supply concerns. Your thoughts, what are you think the market should be concerned about?
Well, thank you, Sean, and always nice to be back and to be with you. Well, actually, this summer was very, what should I say? I mean, very busy summer for not only for me but also for the oil market. There was so many uncertainties during the summer and a lot of areas of concern, and thank God that we are getting into at the end of summer, and we're getting into I hope a situation where we can stabilize not only the market but also the situation in the market. So indeed, I mean, there was a lot of uncertainties during the summer. There was a concern on supply side. Also, demand was, demand in summer was supposed to be more increased than what it happened. There was a shock or a short of supply of crude, was a fear of a short of supply of crude during the summer. But all of that really didn't really happen, and alhamdulillah. And things went okay, except with one or two uncertainties that they are still there. War is one of them. Lockdowns is the other one in China, and also a slowdown in the economy, the world economy. So, and these fundamentals, or these three things, I think they will continue staying with us for the coming few months. So let's hope that getting into starting of a new session and new maybe winter side, then we hope that with the statements from OPEC and also from His Royal Prince, Royal Highness, will stabilize. That is the main concern at the moment, that we is trying, or OPEC is trying to stabilize the market and without raising any kind of uncertainties in the air.
Let's welcome back Andy Levin, COO of Sahara Energy Resources. Andy, the Minister of Saudi Arabia built his comments earlier in the week around the idea, as Ali referenced there, stability, but he described it as the market was schizophrenic and it was too volatile. It was scaring away traders. And so that was his analysis, and his was what they were putting forward. The other argument might be that OPEC Plus was simply preparing for the outcome that Russian production might decline because of sanctions, and Iran is coming back, and so they need to make a space for them, but they wouldn't necessarily say that in public. So they chose this thing about far too much volatility. We must deal with that. What do you buy into that thinking?
So I think to a certain extent the market is schizophrenic, but it's not schizophrenic in the psychological perspective. It's just there's a bunch of people that believe the market will get stronger, and there's a bunch of people that believe the market will get weaker. And it kind of depends what the weather's like as to which side of the fence they sit. So if you look out long term, there is, as Neil was saying, the reality is the concern has now switched to demand. There are a lot of very negative signals about future demand. You've just got to look at the price of gas in Europe. We're coming into the winter season. I have no idea what is going to happen when you have got thousands of people who cannot afford to pay their electricity and gas bills in the UK, right? So demand is a real issue. And if demand starts to come off, then clearly the world will be oversupplied. So if you want to play out that scenario, in that scenario, OPEC will be looking to cut production.
But on that point, Andy, let me just challenge that quickly. Just because I think what you're referencing there is the power generation shortages will compel people to restrain consumption, but that's on the gas side. Does that not trigger the possibility from an oil point of view that there'll be a crossover, that there will be more oil being used to deploy into power generation, and so demand for oil could be actually accelerate?
And that's exactly why we're schizophrenic, right? Because the counter argument would be, certainly if you look at the UK, I was reading newspaper reports that they reckon 30% of the population is now in energy poverty, i.e. the amount of their cash flow that they have that goes into supplying electricity and heating is a significant portion of their income. That's in the summer. When you get to the winter and people have to start scraping ice off of their windscreens of cars, and they are having to wear extra jackets and coats inside because it's cold, I'm not sure that it's a question of just being able to switch. It's a question of, are people going to pay for it?
Neil, in all of the noise, sort of, if one sort of turns their eyes on the fundamentals, right? USSPR, as some reference from Strategic Petroleum Reserves, is at somewhere near a 35-year low. Global inventories, we saw the forecast for this week in the US, stockpiles dropping 5.6 million barrels. The global 5-year average is well, below, global stockpiles well below the 5-year average. Idle supply is well below normal levels. I mean, these fundamentals have always been the pillars of a higher oil price. They remain so.
Well, yes, but as we've just been discussing with Andy and before that with Ali, what we have got here is, because of very high prices for other fuels, and obviously gas is leading the way here in Europe, and now we're seeing higher gas prices, natural gas prices in the US as well. That is feeding through onto the oil market. And I think it was Andy that mentioned in the course of his last remarks this issue of the switching to oil from natural gas in some parts of the world in the power generation sector, leading to possibly increased demand. And in fact, this is one of the things my former colleagues at the IEA pointed out in their last oil market report. It was one of the reasons why they increased their expectations for demand in the short term. And I think something we need to be a little bit I think a bit more realistic here when we're talking about the oil market now. We're focusing on crude oil prices. Brent's 99.99 or whatever it is. And it goes up a little bit every day, goes down a little bit every day. But it's the product prices, which is where the action is. That's what really matters these days, not whether the Saudi minister makes possibly an off-the-cuff remark. I don't know.
Well, they've had a big correction over the summer, haven't they? They've come off quite nicely in terms of certainly in the US driving season.
Yeah, sure, but they're still very high. And ultimately, it's prices at the pump, it's prices in your heating oil tank that you're paying is what really matters. And those prices are still high. Now, in this environment where we're talking about the eventual imposition of tough sanctions on Russian oil, which has not yet happened, that is bound to lead to higher crude prices, but it's also going to impact on the product market as well, because there's lots of Russian diesel finds its way to Europe and elsewhere. Yeah, the fundamentals, as you were saying that it's a traditional fundamentals outlook. Yes, of course, you're absolutely right. But we have loaded on now a geopolitical element into this market, such as we have never seen before. That's the big difference, which makes it so difficult.
And all of those circumstances, you sort of wonder why oil prices would drop any further than where they're at. Ali, what price of crude oil should OPEC Plus defend, or what price of oil do you expect them to defend? Clearly, the Saudi oil minister is long enough in the tooth, as they say, to know that his comments on Monday were going to do the exact outcome that they did. And so the higher oil price at this particular moment in time, when the global economy does seem to be teetering closer and closer to the edge of recession, what is the oil price you think that OPEC Plus should be targeting, defending? And is it $100?
Well, actually, it's difficult. I mean, normally OPEC and OPEC Plus members, when they meet and they sit together and discuss about the oil market and fundamentals, they don't really focus too much about the oil prices, and that is very normal. But if you're asking me, and I will tell you, maybe with the situation that we have around us, the inflation very close to us, and the everything that negative indications of growth, the economy or growth economy. I think $80 to $90 it should be acceptable from the producers and also the consumers. Let alone that it is difficult to accept $80 or $90 with this kind of situation that we are getting into. But you have to remember that there is a lot of investments, upstream investment, that they have to take place in the very close and very near future. Without those investments, then I think we are getting into 140 and 150 again of oil after 1 or 2 years from now. So we, as a producers, countries, then we need to invest. And for us to be able to invest, then we need to the price of oil to be roughly around $80 and $90.
$80 and $90, and we're now at 100. Andy, I wanted to get your views on the drought. If you were still sitting at the front end of the BP trading desk where you sat for many years, how would you be trading this scale of drought in China, across Europe? The basically hydropower is being knocked out practically in both of those markets and economies. What does that mean for the energy markets?
Oh, blimey.
I know, sorry about that.
So I think you can see the consequences of, in some of the places, especially like China, who have really become very much an electrified areas and locations. And it's actually very difficult to see how you replace that scale of electricity that is coming from hydroelectricity with anything, in all honesty, right? So I think what you've got is you fall back onto, and Rustin was making the question, made the point in the chat, that actually switching of the sources of where your energy is coming from for electricity generation depends very much on your infrastructure. And unfortunately, in a lot of the places around the world, hydroelectricity has been presumed to be, it will always be there. And unfortunately, it's not, as we've found out. Solar power is probably more reliable than hydroelectricity, given our short-term recent experience. So in reality, in terms of the impact of the drought on, and most of the places where you've got hydroelectricity as a major source, there's not a lot you can really do. It's all around the edges.
And one would imagine, again, and there's arguments why switching isn't viable, but ultimately you would think that the droughts have to be supportive to oil prices, at least on the margins, because of the switching that it would require, certainly coal and gas perhaps more immediately. But Neil, I wanted to get your views on where all things war in Ukraine is going as we come out of the summer. This is the Independence Day of Ukraine from the Soviet Union. There's a lot of noise emerging that it could be a trigger for this war to actually escalate to a larger level. We've seen gas disruption into Europe massively. We have not ever seen the oil disruption that the IEA forecast. Is that still to come? Where is this all going from the point of view of energy flows out of Russia into Europe, do you think?
Well, you're right to say that we haven't yet seen the disruption to Russian oil exports. That was first thought to be the case when the invasion took place in February. And the IEA came out with a number, I think in March or April, which this 3 million barrel a day number that you've quoted a couple of times. And that was a first effort. And, I think it was a chunky number. I felt that at the time, and it's turned out not to be the case. But if the European Union and the United States and other countries are to be consistent in their policy decision to support Ukraine and to impose tough sanctions against the Russian energy sector and other sectors, then the Russian exports, certainly to Europe and elsewhere, must fall significantly. Otherwise, their policy would have failed. So they will follow through on what they have said they will do when they've had time, of course, to make adjustments and line up alternative supplies. Russia, on the other side of the balance, will, of course, attempt to make up for lost sales to Europe and elsewhere by higher sales to China and India, which of course they've already done this year to a pretty significant level. So, obviously net for Russia, the drop-off which is likely to take place will not be probably in the region of 3 million barrels a day. We'll just have to wait and see what that is. But it is significant, and it will impact balances. On the other side of the balance, of course, the other thing that will be happening as we move through October is the cessation of the drawdowns from the US SPR. But on the other side of the balance on supply, of course, there is the possibility, and it seems to be a higher possibility now, that Iranian barrels may return to the market, not immediately, but within the reasonably near future, which will to some extent act as an offset to fall-offs in Russian supply. So yeah, today is Ukraine Independence Day. From an entirely personal point of view, I salute them and God bless them. But the European Union, if it sticks to its guns, and guns is probably the wrong phrase to use here, but if it sticks to its intentions, then the logical conclusion to that is that Russian supplies will be impacted and the market will adjust accordingly.
Ali, let's just pick up on that point. Of course, the big story this week, and it has been bubbling now for the last week, maybe, the imminent Iran nuclear agreement. We've got a headline in our daily digest of Iran sort of critiquing the US for being so slow in their response to the latest offering. What's your own outlook for that? Is this another moment of a false dawn, or is this the one where it'll cross the line?
Before answering you, it's a
Please.
it's a very dynamic, situation. I'm just following to Neil, his comment about the Russian crude. I don't know, and please, anybody to correct me if I'm wrong, but you can have sanctions of Russian oil going to Europe. But is it possible to stop Russian oil to flow to China by pipelines? No. I don't know. I mean, it is something that we should consider. So the Russians' production or Russian export will always be there, but maybe we can stop it going to Europe. But
there was an effort. There was an effort to tackle the global flow by removing the insurance cover of marine traffic. That was part of the last sanctions, but it does look like the Europeans have backed away. That was meant to be implemented in September next week, but the EU now has suspended the implementation of the the removal of the insurance cover on marine flows.
Yeah, that's fine. But when you have oil on the pipelines going all the way to Russia, and with a good discount, then I think it is always going to be attractive for countries like Russia and others close to Russia, close to China.
Well, on that point, Ali, let me just pick up on that, because I'm quite curious as to how the Gulf, Oman, obviously China's your biggest market. It's a huge market for other Gulf oil producers, and Russia is betting in for the long haul here. They're taking more and more oil market share in China, in a market that at the moment, at least, is declining. Is the Gulf Arab states, OPEC Plus, going to stay happy and content to let Russia bet into Russian Urals to bet into China?
It's a challenge. I agree fully with you. I mean, it is going to be a market, fight, a market war for the market share. And Oman, it will be definitely impacted. We are not talking about a big producer or a big supplier of oil to China, but China was always the home of Omani crude, especially with the teapot refineries and so on. So there was going to be a very big challenge for Oman, especially with that ESPO is similar and close to Oman crude, characteristics. So I think it will be a very difficult situation in the very near future. I hope that always they say that the oil will find its home anywhere in the world. Maybe with euros, stop to go to Europe, then maybe the substitute will be from the Gulf. So it will always be a flow of oil anywhere in the world. It depends on the right price and the right transportation cost. Going back again to your question about Iran, I think we are very close this time, and we were before. Anyway, 3 months ago we were very close to sign an agreement, but unfortunately because of the Russian-Ukraine crisis, then things went different direction. But this time I think everybody is willing to come up and to compromise, to come up with a situation with compromisation from Iran and also from Europe and America. So I think we are very close to sign an agreement, and I think this is going to benefit everybody, actually, America, Europe, and Russia, especially that with an issues of providing the market with the right volume of oil, then Iran can play a big player to also include some oil in the market, especially that they are already having about 90 to 100 million barrels already floating, so they can act immediately. So it is going to be a good indication of how much that we can be ready to accept the Iranian crude in the market. I'm worried that maybe with this new oil coming into the market, that we will have more oil floating and a lot of oil in the market, which is going to affect the price, basically.
Well, it might bring it down to that lovely spot of 80 to 90 that you mentioned earlier. Maybe not the big 100, but that's still a nice chunky oil price, isn't it? 80 to 90.
But we're talking about $20 less. So if we're talking about
it
80,
could be, so, maybe 90,
80.
But it's a powerful dollar too, right? In terms of the yen is out in outer space, the euro is falling through the floor. Let's go to the survey question to get everybody else's view on the Iran deal. Is it another false dawn, or indeed is this the moment when it actually is going to happen? Will Iran and US reach a deal on reviving the JCPOA before the US midterm elections in November, which is now essentially 2 months away? Yes or no? Will they reach a deal? Yes or no? In the coming months or 8 weeks or whatever it might be. Some people thought it's in the coming hours. I'm being generous by putting it out 2 months. So I suppose if it doesn't happen in the next week, you might say it's never going to happen. But Andy, let's talk a little bit about China. Where is China right now, and what is its outlook, do you think, as we go into, we're trading October, delivery into November, December. We're early into the new year on the physical movement of crude. Where's the China market outlook, do you think?
Challenging. And I think it's challenging because even they, although I'm sure they would not agree with me publicly, I don't think they really know what their outlook is economically. They still haven't got over COVID. They've not got themselves back to kind of where Europe is and just willing to live with it. And they've got this big uncertainty about where they're going to get their energy from. They've got this great opportunity where they can get pipeline cheap crude from Russia, but is that actually going to be what they want in the long term? So there's a lot of uncertainty for China. And I think that it's another factor that's driving this kind of uncertainty in the market. So I think China is the key market to be watching in terms of where we're going to go. If they were to kind of say, actually, we think our long term is much more to be benefited by aligning ourselves with the West, then actually things will change very, very dramatically. If they take what I expect to be a much more pragmatic, actually, we're not getting involved, it's just about we do what we need to do, then they're just going to continue what they're doing, and we'll be sitting here saying, but what if, what if, what if? I hope that the droughts we're seeing will come to an end with change in weather. I hope that they'll get themselves back on an even keel in terms of COVID, and they'll start to see their economy flourishing, because I think that will benefit all of us.
Neil, if indeed they do, the industrial base of China ramps up again, the competition on the LNG spot market will be insane. And again, another nail in the winter coffin of Europe. What's your sense of the outlook of those two dynamics working off each other in the coming months?
Well, we're already looking at insane natural gas prices in Europe now. I mean, it seems to become a fashion in the energy media in the last 2-3 days to start quoting gas prices in dollars a barrel of oil equivalent, which gives people an idea, to benchmark it against oil. And you're looking at prices of $450, $500 a barrel oil equivalent for natural gas in Europe. So the crisis has already arrived here, because eventually that gas will be delivered, and that gas will feed its way into the system, and that gas will be paid for by the helpless, hapless consumers. So yes, when China comes roaring back, as you suggested it might, and it presumably it will, because these lockdowns can't go on forever. That is an additional factor in the market, a big player, and that is going to add even more pressure. And there's no doubt whatsoever that there is very little that the supply side of LNG can do in the short term, because these new projects take time to implement. Floating LNG facilities, the Germans look as if they've bought them all, the ones that are available. And we are in for a very, very tight LNG market too. Well, sorry, we are already in a very tight LNG market. And, and we're still in August. We haven't even got to the winter itself as yet. Although I see in the press this morning, because I'm now beginning to think that weather forecasting is a lot more reliable than oil price forecasting, that they're talking about warmer than normal temperatures in Europe and lower than normal rainfall levels in Europe right through November.
Wow. Well, I think that will be a big factor this winter, to the scale in which the winter cold. I mean, last winter wasn't so bad, and it seemed that was a savior even under less severe supply concerns. This coming winter, can it be a savior again? Let's get the survey result question and give Ali the last word. Will Iran reach a deal? This
Yes.
room is quite optimistic. Ali, the geopolitics of the neighborhood, back on just on the back of that survey result, a deal is done. We saw the announcement yesterday that the UAE is resending their ambassador to Tehran for the first time in 6 years, upgrading official relationships there. What does this mean for what has been a very tense political environment, geopolitical environment? This switch over, what's the outlook for that, do you think?
Well, I won't call it a switch over, but it's a normal thing to happen. It is, we started with UAE, and then I think a few months after, maybe the Saudis will start, talking about sending their ambassadors to Tehran. So it's always been a relationship, on a very high level. And I don't think that, sending ambassadors, it's a big thing. Actually, the political, relationship between Iran and the GCC countries, including UAE and also Saudi Arabia, was always there. And ministers and also officials from countries who are flying in and out of Tehran and UAE and also Saudi Arabia. So this is a symbolic, step rather than it is like bringing back the political relationship to Tehran. There was no cut of any relationships between Dubai, let's say an example, with Iran. The trade was taking place, and people are making money, and things are normal. So how can you just have a political cut while the trade is been doing very well? Similar situation with the Saudis. Again, similar situation with the Iraqis. Of course, Qataris and Oman. We never have had any kind of problems, and also Kuwait. So I think this is it's just a step forward, a symbolic step forward. It's just to show the world that with the signing of this agreement, the nuclear agreement, everything will be, we hope that we go back to normal. The war in Yemen is cooling down, and we are hoping that very soon we will come up with a solution on their differences between the Yemenis and Houthis and the Saudis. So things are moving very well. Talks are started already. Oman is playing a big role. Qatar is playing also another role. So we hope that before end of this year, that things will go back to normal, inshallah.
Well, that's a very optimistic place to finish. I would concur with that in the sense that I think this is a very unique moment of opportunity for the region to get on to a much more positive pathway forward. We have, unlike 5-6 years ago when the JCPOA was signed first, it was signed into a very reluctant and disappointed Saudi Arabia and Gulf Arab states. They were not very keen on it. I think the resistance of this time is much less. The opposite, I think. There is a certain welcoming of it. And we have oil price revenues at a very high level. So fiscal balance sheets are very positive. So you have welcoming geopolitical environment, positive balance sheets. It is a moment for positive action and economic cooperation and prosperity for all, if indeed that pathway is taken, or one chooses another one. Let's hope the right path is chosen. Thank you, Neil Atkinson. As always, great to have you back. Andy Levin, great to have your insights. Ali Al-Riyami from Muscat, really, really wonderful to have you back at the table. We do have a pretty useful weekly podcast, Halftime Talk, first of the new series with Wood Mackenzie, who gives some reasonable insights into the direction of travel, that at least from the point of view of Wood Mackenzie, who we know do a lot of deep dive research. So one can sort of look at their research with some confidence. Thank you so much, everybody. Every morning, 10:30 UAE time.
Thank you.
Thank you.
Thank you.